Now, I think this is significant, right? This is wealth growth by income level. So you can see here that since 1989, the top 1% have grown their wealth by over 1,000% versus the next 9%, up 711, the next 40%, so middle income earners up 597% in basically what, a 35, 36 year period. And then, of course, the bottom 50% are up only 492%. Now, if we look at the upper income earners, what's their income growth been? Since 1967, you can see here that the top 20% of households have actually grown their income by 148% versus the middle income earners up 70%, and then, of course, lower income up only 46%. So again, as we look through history here, what you see is the different income levels and different wealth levels are having very different experiences. And this is why inflation becomes such a big issue. Now, I think this is an interesting statistic here. What we did was we compared each of these groups at age 30 to see what does their balance sheet look like. And by the way, these were all adjusted for inflation. So baby boomers, when they were 30, had total average assets of 147,000, with average debt of 53,000, and of which 40,000 was mortgage debt. And they had an average net worth of 93,000 and a median net worth of 24,000. Now you go and take a look at Gen X. Their total assets were 214,000, with a total debt of 100,000 and total or average mortgage debt of 74,000 and average net worth of 114,000 with a median net worth of 31. Millennials, you can see the same exercise here. And again, their net worth at 30 for a millennial was higher than that for the baby boomers. And the median net worth is up substantially as well, almost 30%. So I think the point here is this, is what you're seeing here is that the value and the equity in real estate has been a big part of what's driving these wealth components of these 30-year-olds. Even though they're carrying more debt, the equity they have is actually worth more. So it's another reason why people need to get into housing. Now, if we look at inflation, of course, this has been a big issue, right, for the Fed. And I would argue that inflation is one of the greatest threats to democracy. And why I say that is because if you look at historically, what happens when any civilization or any country has a prolonged period of high inflation, what happens in those countries? Well, typically revolution. And why? Because the top 1% have a very different experience in a high inflation market versus everybody else. Do you think today that those in the top 1% care that a dozen eggs are $6 or more? I would argue no. What is actually happening to the top 1% in a high inflation economy and society? Well, they're getting wealthier, right? Because their assets are worth more. And this is why the Fed works so hard. And when we saw inflation peak at 7%, in the course of a year, we saw the Fed raise the rates from essentially zero to between 5.25% and 5.5% in order to bring that inflation rate down, which they did. However, it's staying stubborn. Isn't yet back to 2%, but hovering in that 2.5 range. So the goal is to try and get that rate down. It's why in January, the Federal Reserve chose not to lower interest rates. Thanks so much for watching. Please subscribe and join us as we continue to build careers worth having, businesses worth owning, and lives worth living.